meeting to order. Welcome to meeting number 43 of the House of Commons Standing Committee on Finance. Pursuant to Standing Order 1082 and the committee's motion adopted on Tuesday, April 27th, the committee is meeting to study the subject matter of Bill C-30, an act to implement certain provisions of the budget tabled in Parliament on April 19th, 2021, and other measures. Today's meeting is taking place in a hybrid format pursuant to the House Order of January 25, 21, and therefore members are attending in person in the room and remotely using the Zoom application. The proceedings will be made available via the House of Commons website, and the website will just show the person speaking rather than the entirety of the committee. And we ask that folks not take photographs of the sites of the screenshot, I guess you'd call it. With that, we have we're dealing with Part 4, Divisions 1, 2, 3, 4, 8, and 9 in this panel, and we have 8 officials, I believe it is, with the Department of Finance. So just go through the names. Jean-Francois Girard, Senior Director, Financial Stability and Capital Markets. Julie Trepanier, Director, Payments Policy, Financial Systems Division. Nicholas Morneau, Director General, Funds Management Division. Kathleen Rye, Acting Director, Pensions Policy, Financial Systems Division. Aaron O'Brien, Director General, Financial Services Division. Manuel Dussault, Senior Director, Financial Institutions Division. Richard Bilodeau, Director General, Financial Institutions Division. And Neil McKinnon, Senior Advisor, Financial Crimes, Governance, and Operations. So to all those witnesses, thank you very much for coming. We appreciate your efforts in this new, somewhat complicated era we find ourselves in. So we'll start with Part 4.
Point of order, Wayne.
Yep. Go ahead, Pat.
Just before you begin, I wonder if you could just give the committee a bit of an outline over how you see the rest of the week unfolding with, has there been any thought to groupings of witnesses in the days to come, or any? Don't take long, but I thought right from the outset, maybe to help us plan our
okay. So today is all I think everyone knows is all finance officials going through all the various divisions that we didn't get through yet in the Budget Implementation Act. Tomorrow is the 2 sessions. 2 panels each session, 11 till 12:30, 12:30 till 3, 12:30 till 2 rather, your guys' time. And then there's the session in the afternoon as well. I don't have that in front of me, but it's all witnesses from the public, taken from the witnesses that were proposed by the various parties. They're not according to themes, Pat. It just became too complicated to do that. They're general witnesses of interest both to the parties and also ones who may have asked if they could appear. Roughly 12 witnesses in a 3-hour session. So it'd be 24 tomorrow, 24 on Thursday, and 12 on Friday, and then we have the meeting on Tuesday as well. And I was trying to see Jamie Fox, who I think was on EdFast's list, Minister of Fisheries here. I spoke with him this morning. I'd like to have a kind of a separate hour for when it's a minister, but given to the amount of witnesses we have, he's okay if we mix him in with another panel on Friday or Tuesday. That's where we're at, basically.
Thank you, Wayne.
It would be, I think it would be better if we could do it on Teams, but given the time frame, just seems impossible to do.
Understood.
Okay. So we will start with Part 4, Division 1, Stability and Efficiency of the Financial Sector, Changes to the Canada Deposit Insurance Corporation Act. I'm not sure who's up from the department, but just state your name and go ahead. Just for committee's information, we will basically, instead of our regular slots and questions, we will just take questions as they arise, like we did on Part 1 of the BIA. So, Division 1 of Part 4, who's on? You'll have to yell because I can't see all you on my screen at the moment.
Thank you, Chair. It's Julie Trepanier. I'm the Director of Payments Policy, and I'm joined by Jean-François Girard, Senior Director. I believe he had some difficulties connecting, but I don't know if he's on.
Julie, we'll go with you. If you want us to delay that Part 4, Division 1 for a little bit to see if he comes on, we can.
Okay, maybe that's a good idea. Thank you, Chair.
So we'll, and maybe he's on the next one too. Division 2 of Part 4, Changes to the Bank of Canada Act.
Yeah, hi, Mr. Chair. Nicolas Moreau, Department of Finance. I'm the Director General of the Fund Management Division. I'll take care of Division 2 with my colleague Kathleen Rye from the pension section. So I'll provide you with a brief overview of the changes that we're requiring here, and I'm happy to take your question after. Je vais parler en français parce que je crois que vous avez la traduction.
I'm going to be doing it in French, I think. So we have Division 2 of Part 4. You have sections 140, 144. This is with respect to changes, legislative changes that will make the program more efficient for unclaimed assets. These unclaimed assets, these are deposited in accounts in federal financial institutions that have been inactive for 10 years. After 10 years, this is transferred to the Bank of Canada, the assets, and those, and so all of these that were for the bank, belong to the banks, they become federal of the institutions. And this once this legislation will improve the situation. In Division 2, there's a modification of the Bank of Canada Act to authorize the Bank of Canada to publish certain information online with respect to unclaimed amounts. The 1985 Act for the Pension Benefit Standard Act is also modified in order to insert so the transfer of pension plan assets relating to the pension benefit of any person can be transferred to a designated person where that was requested. And finally, the Trust and Loans Companies Act is also modified in order to include amounts that are not in the Canadian countries in the unclaimed amounts regime, and will impose additional requirements on financial institutions in connection with their transfers of unclaimed amounts to the Bank of Canada and communications with owners of those amounts. And therefore, more information needs to be transferred, the social insurance number, for example, and the date of birth to help. So that gives you an overview of Division 2.
Mr. Falk.
Yeah, I'm just wondering if the officials can explain to the committee how much of an effort is made to find the rightful owners of those inactive accounts. Like, what degree of effort is made, and also what amount of dollars are we typically looking at on an annual basis?
Thank you. Thank you for your question. What effort is being done? So there's two parts here, right? There's the first part where the money is sitting at a financial institution. So within the first 10 years, it is required by the financial institution to send via mail a reminder to the individual at year 2, 5, 9, and also at year 10. If the owner of that unclaimed fund is not responding, then the money will be transferred to the Bank of Canada. When it's at the Bank of Canada, the bank has a list that is currently published on their website that will provide the names and the amount that is currently in this unclaimed that has not been basically claimed yet. In terms of amount that we have, so overall, the bank has about 2.2 million of unclaimed fund right now sitting unclaimed account, and on an annual basis, about a bit less than $1 million is being transferred to the Receiver General account. So you need to understand that when an unclaimed account is less than $1,000, the bank is required to hold this account for a period of 30 years before transferring the account to the Receiver General. If it's more than $1,000, the bank needs to hold this account for a period of 100 years.
Thank you.
I don't think the original one that deposited is going to claim it after 100 years. Not likely. Tamara, Ms. Jensen.
So what is the process if someone comes at 11 years or 12 years? You know, maybe they've been out doing mission work in the Amazon or something like that, and you couldn't contact them. Can they get that money back?
They can. Basically, it's a process with the Bank of Canada, so they need to validate that they are the owner of this account. So they need to provide information that the Bank of Canada will ask for. That said, it's really complicated right now or it takes a lot of time to make that validation because the Bank of Canada doesn't have the social insurance number. They don't have also the date of birth of this individual. So they need to rely on past basically transaction in the account. You need to rely also on this individual validating where was the account last time they made operation with it. So it takes a lot of time in order to basically make the link between the owner and the person who's claiming this account. So by changing the law, we're requesting in this C30 bill, it will really expedite everything because we'll force the financial institution to communicate the social insurance number to the financial institution, as well as other information that will really help to make basically this transfer in the future.
Is there any other questions on Division 2? Seeing none. Sean, you just get your hand up there, Sean. Okay, then we will go to Division 3. Changes to the Budget Implementation Act to exclude certain businesses from the application of a provision to the Bank Act. Who was on that one? You again, Mr. Okay, Aaron O'Brien, you're on.
Thank you so much, Mr. Chair. Good morning, everybody. My name is Aaron O'Brien. I'm the Director General for the Financial Services Division at the Department of Finance. I'm happy to talk to you about this small technical amendment. The Government of Canada introduced amendments to the Bank Act back in 2018 to further advance consumers' rights and interests when dealing with their banks. The new Financial Consumer Protection Framework, which is not yet in force, is intended to protect retail consumers, including individuals and small and medium-sized businesses. Retail consumers typically lack the resources and sophistication to negotiate with banks on an equal footing. This technical amendment to the Bank Act would clarify that the statutory right to cancel a contract with the bank only applies to retail consumers, which are individuals and small and medium-sized businesses, and specifically excludes large businesses. I'm happy to take your questions.
Okay, is there any questions to Ms. O'Brien? Mr. Fast and then Mr. Falk. Ed?
Yes, Ms. O'Brien, can you just clarify the definition of a large business is one that has authorized credit of more than 1 million, more than 500 employees, and annual revenues of more than 50 million, correct?
That's correct. That's the definition that currently exists in the Bank Act.
Okay, and all three conditions have to be present for that to be considered a large corporation.
That's right.
All right, thank you.
Mr. Falk,
That was my question too.
oh, that
Thanks,
was your question.
Thanks,
He
Mr.
stole
Chair.
your
Yeah.
question, and he's your colleague.
Yeah, he
It's
stole my
twofer.
question. I can't believe it.
Okay, is there any other questions here? All right, thank you very much, Ms. O'Brien. We'll go to Part 4, Division 4. Changes to the sunset provisions of the Trust and Loan Companies Act, the Bank Act, and the Insurance Companies Act. Who's on that one?
Good morning. It's Manuel Dussault here, Senior Director at Finance Canada. Let me present an overview, and I'm happy to take questions. So this division would amend the Bank Act, the Insurance Company Act, and the Trust and Loan Companies Act to extend the current sunset provisions by 2 years to June 30th, 2025. Canada's federal financial institution statutes currently include sunset provisions that prohibit federally regulated financial institutions from carrying on business after June 21st, 2023. These sunset provisions are an important feature of Canada's financial sector framework. By mandating the renewal of the legislation every 5 years, the sunset provisions provide an opportunity for the government and Parliament to regularly consider the framework to ensure the financial institution statutes remain up to date, are technically sound, and respond to changes and emergent trends in the financial sector. Extending the current sunset dates by 2 years to 2025 will enable full consideration of the impacts of the pandemic on the financial sector as part of the next legislative review. Thank you.
Okay, so the reason being COVID, I suppose.
Yeah.
Any questions from anyone? We're all okay on Division 4. Then the next one we will turn to is Division 9, I believe, and we'll come back to Division 1. Division 9, I might mention, just going through my list on all the divisions we're dealing with today. Division 5 is not mentioned in any, so Mr. Clerk, I guess, we'll need someone as a witness on Division 5 at some point. Division 9 of Part 4, changes to the Pension Benefit Standards Act 1985.
Thank you, Mr. Chair. My name is Kathleen Rye. I'm the Acting Director of the Pensions Policy Team at Finance Canada. So this division proposes legislative amendments as part of the establishment of a revised framework for multi-employer negotiated contribution pension plans. Negotiated contribution plans are a type of defined benefit plan where contributions are fixed by an agreement and employers are only required to contribute the amount set out in the agreement. So the proposed amendments to the Pension Benefit Standards Act are part of this revised framework, and they would establish new safeguards to uphold benefit security for these plans through requirements for them to establish and maintain governance and funding policies, as well as grant new regulation-making powers to the Governor and Council with respect to those requirements and with respect to amendments to negotiated contribution plans. Happy to take any questions.
Mr. Falk.
Yes, thank you on that question. It's a CPP question, but when an individual works for multiple employers or has multiple T4s coming in, on a person's personal income tax return, the over-contribution because of multiple T4s is refunded to the employee, but is there any consideration giving to also reimbursing employers on a pro rata share basis of their contributions? Because you're getting sometimes double, triple, quadruple the CPP contributions from various employers.
Thank you for the question. And unfortunately, that's not my area of expertise, so I'm not able to respond to it.
I wonder, could we get somebody to send us a little note on that, maybe, to answer that question? What does happen with the over contribution on the employer side when you multiple when it's overpaid. Okay, if somebody could do that. Any further questions on Division 9? We'll come back to Division 8. No further questions. And Division 8, changes to the Retail Payment Activation Act. Who's up?
Hello, Mr.
O'Brien?
Chair.
Go ahead.
It's me again.
Good.
And I'm here with some of my colleagues. I'd like to acknowledge Richard Bilodeau, the Director General of the Financial Institutions Division, Manuel Dusso, who you met a few moments ago, Senior Director of Frameworks Policy, and Julie Trepanier, the Senior Director of Payments Policy. I'll provide just a short introduction, and then we'd be happy to take your questions. The government is committed to maintaining a well-functioning financial sector that serves Canadians' needs and ensures public confidence in the integrity of retail payments. The retail payments sector enables millions of Canadians to send and receive money on a daily basis and plays a key role in promoting economic activity. The current COVID-19 crisis has accelerated the adoption of digital payments and highlighted the need to keep them safe and reliable. The proposed Retail Payments Activities Act implements a new retail payments oversight framework that would promote growth, innovation, and competition in digital payment services while making these services safer and more secure for consumers and businesses. The proposed legislation includes requirements for payment service providers, such as card networks, payments processors, money remitters, or e-wallets, that are not regulated financial institutions, to safeguard end users' funds against losses and mitigate risks associated with operational failure that could disrupt their service. The Bank of Canada would regulate payment service providers' compliance with the framework and maintain a registry of regulated payment service providers. The proposed legislation also includes national security safeguards modeled on the framework that applies to federally regulated financial institutions to enable the government to identify and respond to national security-related risks. The government has consulted broadly on the development of the framework and has engaged with a wide range of stakeholders, including provincial and territorial officials, who have expressed broad support for the objectives of the proposed framework. The framework recognizes that the federal government and provincial and territorial governments have complementary objectives and powers in this area. The federal government looks forward to maintaining strong collaboration and support from provincial and territorial governments as we move forward with the implementation of the framework. While the proposed framework sets out the main elements of the framework, as the proposed legislation sets out the main elements of the framework, regulations and guidance will be required before it can be brought into force. Thank you. And I look forward to your questions.
Thank you very much, Ms. O'Brien. We have lots of questions on this one. We'll start with Gabriel St. Marie, then Annie Kotrakis, then Peter Julian. Gabriel?
Oui, merci, Wayne. J'aurais trois questions.
Yes, thank you. I would have three questions. Would you like me to just ask one now and I'll come back and ask the others, or should I ask all three questions right now?
Gabriel,
Okay.
we have, I think we got ample time for this panel,
Très
so
bien.
go ahead.
Donc, merci, Madame O'Brien.
Well, thank you very much for the presentation, and I would like to welcome all of the officials. Well, my first question, if I've understood the document of 2017, we want to protect payers for unauthorized use or errors unless it's a fraudulent behavior. Within this bill, we are seeing, and this is under the idea rather of managing operational risks and response to incidents, and so there are regulatory requirements. So is this protection? Is this something that will be in a regulation? And if not, why not having included it rather than have it in the law?
Yes, thank you so much for your question. The legislation right now outlines the framework at a very general level. the intention is that it would address operational risks posed by payment service providers, but the specific details with respect to how the operational provisions would work need to be outlined in regulations. And so those will be forthcoming. And our intention is to consult both stakeholders as well as provincial and territorial colleagues as we develop those regulations.
OK, merci. Donc,
Thank you. So I'm now going to ask my second question. Despite this protection, is the consumer as protected as if he were to make a traditional payment through a bank? And I have other questions after that. Thank you.
Go ahead, Ms. O'Brien.
I would say in general, the principle is to ensure that financial consumers have the same level of protection, whether or not they're issuing a payment through a regulated financial institution or a payment service provider. That's certainly the overall intention.
Donc, je comprends bien votre réponse, l'intention.
So if I've understood your answer, your intention is to have the same type of protection as one would have through a bank when they make a payment. My third question, of course, those payments from one individual to another individual, that goes directly into civil law for Quebec. And in your presentation on the legislation, there's a question of being in communication with the provinces. But how can you reassure us that this bill will not create any kind of overreach on the civil law of Quebec? Thank you.
So initially, our intention is to articulate protections around safeguarding end user funds and operational risk management. Market conduct would be addressed at a later point in time. I can assure you that we have undertaken significant consultations with all the provinces and territories, but in particular with Quebec. They recognize that this is an area of complementary, powers and authority and objectives. We have addressed a number of concerns that the Quebec government had raised in the consultations to ensure that we are respecting their perspective and jurisdiction in this area. So notably, we have excluded, provincially regulated institutions from the scope of this framework. And in addition, we have included a recognition mechanism whereby should any province or territory develop an approach that is significantly similar to the protections that would be provided under the RPAA, that those would be recognized and addressed outside of the framework if necessary. So we feel that we've balanced the shared jurisdiction in this area.
Okay.
Merci.
We can come back to you if need be, Gabrielle, turning then to Annie Kotrakis and then Peter Julian. Ms. Kotrakis.
Thank you, Mr. Chair, and my colleague, Monsieur Saint-Marie, covered with his last question most of my question. But Mr. O'Brien, I would be interested to know if you could elaborate a little bit further on the process of the consultation. What is the actual process when you're consulting with provinces and territories? And I'm specifically interested with the province of Quebec.
Yes, thank you very much for that question. This legislation has been a long time in coming. It is a complex area. We've been working on it for a number of years. We had issued a public consultation paper, in fact, two, but the first one going back to 2015. A second public consultation paper in 2017, after which, we had considered comments received and had adjusted our approach accordingly. But in addition to the public consultations, we have consulted explicitly with the provinces and the territories, not only in terms of our broad policy approach, but as well in terms of sharing the draft legislation with them. You had asked specifically, though, about our actions or our outreach with our colleagues in Quebec. We have a long and a strong relationship with our counterparts at the Quebec Ministry of Finance, and we've had several discussions with them over the years. We have shared the draft legislation with them for their comments. And as I'd mentioned in my response to the previous question, had addressed or had altered our approach to deal with two substantive concerns that they had, notably that we exclude provincially regulated institutions from the scope of the legislation, and that we include a recognition mechanism should one day any province or territory decide that they are going to stand up a similar oversight framework. So in that way, we've addressed their two concerns, and we remain in close contact with them, and have committed to continue that spirit of collaboration as we move forward in terms of developing regulations and necessary guidance that will be required to stand up this legislation.
Ms. Annie, do you have anything further? Okay, we'll turn to Mr. Julian and then Mr. Kelly. Peter?
Thanks to our witnesses for being here today, and we appreciate your service during this pandemic. I want to come back to the issue, of course, that hits so many small businesses in my riding, and I know right across the country, and that is payment fees as part of retail payments. Small businesses are just being relentlessly gouged. There has been some moves for some kind of voluntary capping of these fees. I'm wondering, within the scope of the legislation, or in what the finance ministry is looking at in terms of regulation, is there any due consideration given to capping those fees so that small businesses don't end up, through retail payments, ending up often with huge percentages of their sale actually going to the big credit card companies rather than to their bottom line when they're trying to get a community business going?
Ms. O'Brien?
Yes, thank you so much for that question. With respect to the RPAA, there's nothing in this legislation that would give the government authority to address fees. However, there is a separate budget commitment that the government made within budget 2021, where the government has said that it will negotiate lower fees with the credit card networks, wanting to ensure that small, medium-sized businesses enjoy the benefit of that fee reduction, and as well that any fee reduction would not adversely affect the value of point or loyalty points associated with credit cards. So that does fall under my area of responsibility, but is not part of this the RPAA legislation.
So if I could have a supplementary, Mr. Chair, thank you for that. So where do you see that in terms of timelines? I mean, small businesses are really struggling, as we all know. A lot of them in my riding and across the country have closed their doors, and the there's no other way to put it, gouging that is taking place. Credit card companies that are taking 10% of a sale, sometimes higher. It's just it makes the small business folks really struggle for the bottom line, both to establish themselves but also maintain themselves. So where do you see the timelines in terms of those discussions and negotiations? What is the deadline that the government has set on that?
Go ahead, Ms. O'Brien.
Thank you. So as stated in the 2021 budget, the government intends to come forward with next steps in time for the fall economic statement. So we will be conducting consultations and we'll be studying this issue over the spring and early fall, and we'll come forward with a plan in time for the fall economic statement.
Thanks for answering my question.
Then we'll go to Mr. Kelly, followed by Mr. Fast. Pat?
Thank you. My questions are right on the same vein as Mr. Julian. So if I heard what you said correctly, that there's a plan to have a plan in the fall economic statement, that's as far as the government has gone in fulfilling the promise of reducing credit card merchant fees, the cost to small businesses.
The government intends to outline the plan in the fall economic statement. That's correct.
Okay, a plan as opposed to tabling legislation that would implement the commitment that they have made in the budget.
So we're giving due consideration to the critical path, and we'll be consulting in the near term, and we'll outline the plan in the fall statement.
Okay, thank you. My next, just another point then, I guess, on this. So this in Division 8 here, what you made reference in your remarks on this to increasing competition in this area, which is really the key to better consumer experience is choice. How will this increase competition in this area? Because the regulation that you're contemplating, or the objectives of regulation that you're contemplating, may well be sound and necessary, but not likely to increase competition. When you add regulation to compel businesses to all conduct themselves with the same processes and procedures, you're not increasing competition. You're not likely, and like I can't see anything. I guess I'm hoping to see something that will help out our small businesses who pay the brunt of transaction costs in retail. So let you just maybe address competition and what you mean by increasing competition.
Mm-hmm. Thank you. I think maybe I'd start just by saying the payments sector ecosystem, the foundation of how that works is it's based on trust. And right now, payment service providers in Canada, so I'd mentioned card networks or digital wallets and others, are not subject to a regulatory framework. And that can create a sense of uncertainty. We've heard from payment service providers that lack of certainty can affect business investment in terms of their sector. And so a number of payment service providers, which we call PSPs, welcome being brought under a regulatory framework, as it helps to increase that sense of trust and partnerships and investment opportunities with with the private sector and even with the regulated sector, partnering with banks, for instance. I'd also like to mention this legislation is a necessary foundation block upon which the intention is or would be to open membership and access to Canada's core clearing and settlement infrastructure that is operated through Payments Canada. And right now, it is only the regulated financial institutions who have access to that infrastructure, and payment service providers have to get access to those systems through a financial institution. But the intention would be to broaden membership within Payments Canada so payment service providers can connect directly to these core clearing and settlement systems. And in that way, there will be tremendous opportunity for greater innovation, developing new services and products and competition.
Thank you.
That it, Pat. Then we'll go to Mr. Fast, followed by Ms. Jensen. Ed?
Yeah, Ms. O'Brien, in your presentation, you used the term safeguarding in reference to the payment process. Is the federal government actually in any way stepping in as an insurer of transactions, especially in the case of a catastrophic failure of a payment service provider?
Thank you.
Brian?
Yeah, that's a great question. I guess the short answer is no, but let me give you some context. So currently there are no comprehensive rules that apply to payment service providers to safeguard end user funds. So safeguarding will protect consumers and businesses' funds against financial loss in the event that a payment service provider were to fail. And so what the legislative requirement includes is it would require a payment service provider to hold user funds, so their clients' funds, in a trust account, or they would have to obtain an insurance product or a guarantee of some sort that would cover the end user's funds should the payment service provider fail or reach insolvency. And the other requirement is that payment service providers would have to hold client funds separate from their own operating funds. And in this way, it will provide greater consumer protection and access to funds should the payment service provider fail.
So it's not a matter of the government ensuring these payments, but it's a matter of putting in place very strict security requirements that the resources are always there to satisfy the payment obligations, correct?
That's right. That's right.
All right. Thank you.
Thank you both. Ms. Jensen, you may wrap it up.
So I'm just wondering, when you mention these payment services, are you talking about like PayPal?
Yes. For instance, they would be one of many payment service providers operating in the country. PayPal, Apple Pay, Google Pay, card networks. There are several. To our best estimate, we believe there are approximately 1,500 payment service providers operating in Canada.
Is there regulations like this in any other country that exist?
There are indeed.
Where would that be?
In most other jurisdictions, notably the G7. In fact, Canada is notable in terms of having an absence of a regulatory framework in this area.
And how about Bitcoin?
So the framework would provide us with flexibility to address cryptocurrencies that are used for retail payments. At the moment, however, there aren't a lot of cryptocurrencies that are used for retail payments. For instance, people aren't using Bitcoin to, buy their coffee at Starbucks or.
Okay,
but
now
should they be used in a retail context? This legislation would give us authority.
So what it would appear to be then is that you're trying to regulate things that people actually do have confidence in already. I know PayPal and things like that, Google Pay and so forth. I haven't heard of anybody that was concerned that they were going to lose money on that.
Well, but this should provide greater assurance that when a Canadian is using these services to for daily purposes, that the funds will safely leave their account and make it into the account of the merchant using it. So it will provide greater assurance.
Will it also provide higher costs then for Canadians that have been using what has worked very well?
Will it provide higher costs? There will be a cost to implement the framework, and then I would assume that payment service providers would, in some way pass that on to clients using their services.
Okay, it's just shocking to me because I think in general most Canadians have been very satisfied with things like PayPal, Google Pay, Apple Pay, and so forth.
I think that's fair, but to date, nothing has gone wrong, and it's in the instance that there, unfortunately, if something were to go wrong, then there would be no protections in place, and so this framework would ensure, for instance, that you would have access to the funds you have on account at PayPal or at another firm. I don't want to pick on a particular payment service provider. But,
so sorry, one more time. You're saying you would have access even though it's not insured, and that's because you're going to make PayPal organize a Canadian bank account that holds in trust the funds that Canadians are using on PayPal.
That's right. So the payment service provider would have to hold the funds in trust or arrange an insurance product on the account or a guarantee. And in addition, it would require that payment service providers cannot commingle their corporate funds, so their operating funds, with the funds of their clients. So they have to be held separately.
And this trust that you're asking them, like Google Pay and Apple Pay, to create here in Canada, is there any other country that's asking that of them in the G7?
I believe that we're being consistent with approaches taken in other jurisdictions.
Okay. There's never a problem till there's a problem. And then it's the government's fault. In any event, we require lawyers to hold trust accounts too. Then turning to Division 5 was just missed from the agenda, and I understand this group is willing to deal with Division 5, and then we'll come back to Division 1. I believe Mr. Giroux is on the line, not on video, so he doesn't have to be on video. We'll let him go ahead with voice. So Division 5, who's on that?
Yeah, it's Jean-François Girard here.
Okay.
I'm glad to see you. Hopefully you can see me. I see myself now on the screen, which was the result of tremendous effort by the support staff. So congratulations on having high quality support there. Division 5 is very simple. It sets at $119.5 million the appropriation set out in the Canadian Securities Regulation Regime Transition Office Act, which represents an increase of 12 million. And these payments can be made to the Canadian Securities Transition Office. So that's Division 5.
Any questions on Division 5 related to the Canadian Securities Regulation Regime Transition Office Act? No questions on that. Straight forward. Then we'll come back to Division 1. And Mr. Girard, I believe you were on that as well.
Yes.
Okay. Changes to Canada Deposit Insurance Corporation Act.
Yes. So I will cover in Division 1 clauses 126 to 139 for the stability of Canada's financial system by improving the legislative framework that applies in the unlikely event of a federally regulated deposit-taking institution or financial market infrastructure in the unlikely event that they were to fail. We also have other amendments that relate to the supervision of payment systems. These amendments are fairly technical and represent a continuation and improvement of the existing framework rather than new policy. So starting on with clause 126, the resolution provisions of the Canada Deposit Insurance Act, or CDIC Act, provide the power to impose stays, also known as suspension of proceeding, to suspend the rights of certain creditors and other counterparties to facilitate the resolution of the institution and preserve value. So we have amendments that would modify the scope of these stay provisions in certain circumstances. In particular, support the application of stays to bail-in debt once a resolution has been initiated, exclude sovereign entities and central banks from the stay provisions of the Act, and provide that CDIC member institution must include a confirmation of the application of stay provisions in the Act in prescribed financial contracts, eligible financial contracts, which are a class of contracts that include derivatives. The next laws would modify the provision that authorize CDIC to take control of a failed member institution to facilitate a sale by extending the time limit to complete a sale to 12 months from the current limit of 60 days. And then clauses 128 to 132 and 134 and 135 would amend the Canada Deposit Insurance Corporation Act and the Payment Clearing and Settlement Act to modify the compensation provisions of these acts that provide that creditors would not be in a worse off position by the actions of a resolution authority than under liquidation. More specifically, it clarifies the appeals mechanism available to creditors when a failure has occurred and they request a review of a decision made by CDIC or the Bank of Canada on the compensation to which they are entitled to in resolution. Clause 133, 136, and 137 would amend the Payment Clearing and Settlement Act to clarify the Bank of Canada's authority to oversee payment exchanges as clearing and settlement systems. And finally, clauses 138 and 139 would amend the provisions of the CDIC Act that are not yet enforced to provide CDIC with a targeted expansion of its authorities to make certain payments of insured trust deposits when there are errors or omissions on the record of the failed member institution. So this concludes my remarks on Division 1.
Hey, I have Ted Falk. Mr. Falk.
Thanks, Wayne. Earlier, Mr. Fast asked a question whether all of a sudden in our previous discussion, whether in fact the government would be assuming liability for payment services. And you're making changes here under the Deposit Insurance Corporation, specifically towards Payment Clearing and Settlement Act. Are you going to be through the Deposit Corporation, Deposit Insurance Corporation, insuring these payment services?
No,
Mr.
that it's not part of this these amendments. So we have a number of amendments. One is on the compensation provisions, and it really deals with if there's a failure of the financial market infrastructure. And there are certain powers for the Bank of Canada there to take action. And there's a compensation regime that exists, and we're clarifying like the appeals mechanism for that. So then the other one relates to the supervision of payment systems, and I think maybe Mrs. O'Brien might be, or Julie Trepanier might be in a better position to explain to you exactly what the scope of these provisions are.
So,
Ms.
so even though
Trepanier?
Yes.
Just go ahead, Julie.
Thank you, Chair. So under the Payment Clearing and Settlement Act, the Bank of Canada has responsibility for overseeing clearing and settlement systems. These are the core payment infrastructure that banks, for example, use to settle payments among themselves. Under the Act, the governor of the Bank of Canada can designate a payment system if it poses systemic or a risk to the Canadian payment system. As this system evolves, the different function of exchange, clearing, and settlement are becoming a different function. And so these amendments to the Parent Clearing and Settlement Act would clarify the Bank of Canada's authority to designate payments exchanges in order to oversee their risk. But there's no additional protection in terms of compensation as part of these amendments.
Ed, Mr. Falk?
Yeah, and none of these amendments are expanding the coverage of insurance for towards the payment service industry.
No, that's right.
Okay, very good. Thanks.
Any other questions on Division 1? All right. Is there any questions on any of the divisions that we covered on this panel? 1, 2, 3, 4, 5, 8, and 9. Any questions, anyone? Or we'll allow the panelists to depart. Get off Zoom and get off this Zoom call, go to the next one. All right. Look, thank you very much. Thank you very much, number one, for what you do. And thank you for answering the committee's questions today. We know it's different, very different times. You can't walk down the corridor and rub shoulders with your colleague when you're trying to sort things out. That's not easy. So with that, we'll thank you very much, and we will suspend and allow the clerk time to bring in the next panel. We really don't start for about half an hour, but if people could come back online in 20 minutes, we'd be ready to go. Thank you very much, folks, again. and we're resuming meeting number 43 of the Standing Committee on Finance on the subject matter of Bill C-30, an act to implement certain provisions of the budget tabled in Parliament on April 19th of this year, and other measures. We have a number of officials from the Department of Finance with us, and we'll be dealing with it in this section on Part 4, Division 6, 7, 11, 12, 13, 15, 16, and 20. So I will not, all the officials that are here with the Department of Finance, I'll not go through quite a number of them. I'll not go through a list of names at this early stage, but if I could ask officials when you start your presentation, if you'd just state your name and your position, I believe it'd be easier that way. So we will start with Division 6 of Part 4, changes to the Justice for Victims of Corrupt Foreign Officials Act, better known as the Magnitsky Act law. So who's taking that one on? Mr. Brown, do I see you smiling?
Yes, hello.
Okay, go ahead. Welcome. Introduce yourself, Justin.
Thanks. My name is Justin Brown. I am the Senior Director of the Financial Crimes Policy Team at the Department of Finance. I have some colleagues from Global Affairs Canada and also Department of Finance here with me as well. Is the preference for officials to provide a brief overview, or
yes, that's what we'd prefer. Just give us a brief overview, and then we'll go to rounds of questions from there. Go ahead.
All right. So the government is committed to a comprehensive approach to combating money laundering and terror financing and imposing financial sanctions. This promotes the integrity of the financial system and the safety and security of Canadians. As part of this work, the government continually works to strengthen and modernize the legislative framework, for example, to respond to technological changes and evolving threats, and to take into account administrative burden. Part 4, Division 6, proposes legislative amendments to the Justice for Victims of Corrupt Foreign Officials Act, or the Sergei Magnitsky Law, to reduce the reporting burden for financial institutions by removing the monthly nil reporting requirement for financial institutions to confirm that they were not in possession of assets associated with sanctioned entities or individuals, and requiring that financial institutions disclose without delay, and once every 3 months after that, if they determine that they are in possession of assets associated with sanctioned entities or individuals. I'll pause there. Thank you.
Thank you very much. Is there any members got any questions at this stage? I guess, Justin, I just had head one, and we'd heard this at the original briefing as well, reducing the reporting burden, and I understand that. Is there any, and it's a burden on the smaller institutions for sure, but has there been any analysis done on the potential impact that may have in terms of catching those that are involved in this kind of crime more quickly, or whatever? The Finance Committee did, it must be 4 or 5 years ago now, we did a very extensive study on money laundering, held hearings in Britain, in the United States, and elsewhere, and come up with a unanimous report, very good report, that some of these changes I know come out of. What's your thoughts on that? What kind of analysis has been done to ensure that it won't weaken the system we already have in place?
We would not expect any weakening of the system. Reporting entities would still be required to disclose without delay the existence of any property in their possession or control that are subject to sanctions. So the proposed change simply removes the nil reporting requirement, which is viewed as an unnecessary administrative burden for reporting entities.
Thank you. Mr. Falk.
Thanks, Wayne. I would agree with the change. I think it's a good change. My question would be, would they still be required to submit an annual declaration of compliance?
Perhaps I'll turn that question to my colleague from Global Affairs Canada, Nilu.
Nilu,
Thank
go
you.
ahead.
Thank you for the question. So currently, as my colleague Justin Brown has said, the amendment to the Justice for Victims of Corrupt Foreign Officials Act is really a change that would first remove the requirement to report when financial entities have no property in their possession or control. It also changes the frequency of this reporting from once every month to once every 3 months. This is currently the requirement that's set out in the Act, so this would only have a change on that specific reporting requirement with respect to the monthly reporting requirement that's currently set out under Section 7.1.
Okay, and I think it makes sense.
Okay, thank you. No other questions on Division 6. Then turning to Division 7, which is Proceeds of Crime, Money Laundering, and Terrorism Financing Act. Who's on that one?
Still me, Mr. Chair.
Okay, still Mr. Brown. Go ahead, you're welcome.
So I'll continue my remarks. So further to what I said earlier, Part 4, Division 7 proposes amendments to the Proceeds of Crime and Terrorist Financing Act. And these amendments would, it's a short list, they would expand the requirements of the Act to cover businesses engaged in the transportation of currency or certain monetary instruments, so more or less the armored car services sector. They would strengthen criminal penalties under the Act and the registration requirements for money service businesses. They would enhance the operational effectiveness of the Anti-Money Laundering and Anti-Terrorist Financing Regulator, the Financial Transactions and Reports Analysis Centre of Canada, or FINTRAC, by enabling a cost recovery model for its compliance activities, clarifying its authority to follow up with reporting entities to obtain information, and expanding the information that FINTRAC can disclose to law enforcement agencies and other disclosure recipients. And finally, the proposed amendments would include technical amendments, such as clarifying the definitions of politically exposed domestic persons and heads of international organizations. Thank you.
Thank you, Mr. Brown. We'll start with Mr. Julian and then go to Ms. Zerowitz. Peter?
Thanks, Mr. Chair, and thanks to these witnesses for coming forward today, and thank you for your dedication during this pandemic. It's deeply appreciated, your service to our country. I wanted to get more details on the cost recovery model for FINTRAC. This is something that we have spent a lot of time on at Finance Committee, and so I'm interested in hearing more of the details.
Mr. Brown or whoever?
Sure. So the the proposed legislative changes would essentially be enabling provisions. So they would allow FINTRAC to impose a cost recovery model on reporting entities for their compliance activities. And
I'm sorry. I appreciate what you're saying. How does that work practically?
Sure. The details of that would be prescribed in regulation. So the proposed legislative amendments don't contain the details of the methodology for cost recovery. But broadly speaking, the regulated entities that are supervised by FINTRAC and who are subject to those compliance activities would become the ones that are responsible for paying for those compliance activities in a methodology that would be set out in regulation.
Would you be able to share with us what the finance ministry is actually proposing in that regard? I mean, obviously, the legislation has been set up with a framework and a view to put the regulations on top of that. So unfortunately, that doesn't really give us enough detail. Who exactly would be, not targeted is too strong a word, but who what are the entities that are foreseen to be paying the cost recovery, and to what extent, when we're talking about these activities, are we talking about partial cost recovery, full cost recovery? What is the model that led to the legislation being put forward? And the regulation, I am sure, has already been considered to fit in and to fit on top of the legislative proposals. So if you could share with us more of the details, I think that would be helpful. And if those details are not forthcoming, what the consultative model, we just had a discussion in the first panel around where the ministry is going in terms of merchant fees that small businesses are paying. So we now know what the timelines are and what the consultative process is. If you're not able to share with us the details on the proposal, because it hasn't been elaborated yet, if you could share with us what the process would be. Thank you.
Sure, no problem. I'll provide a little more detail. So it would be businesses and professions regulated under the anti-money laundering legislation. So there's a list, but it would include financial institutions such as banks and credit unions. It would include casinos sector, certain actors in the real estate sector, dealers in precious metals. There are entities that are regulated under that act and are specified under that act. The model is we looked to other international jurisdictions. We also looked at other regulators within Canada. So specifically, the Office of the Superintendent of Financial Institutions. FINTRAC recently assumed sole responsibility for the supervision of federally regulated financial institutions for anti-money laundering purposes from OSFI. And OSFI covered these costs through its own cost recovery mechanism. OSFI's similar to what is being proposed here. For OSFI, there's an enabling clause in legislation, and the details of that cost recovery model are laid out in regulations. I think the Financial Consumer Agency of Canada is another regulator in the federal financial sector space that has a similar approach. In terms of consultations, following the passage of this legislation, the Department of Finance, with colleagues at FINTRAC, intends to consult with regulated entities on the overarching proposed scope of the regulations. So they'll be given an opportunity to see what the methodology would look like. And we would have the opportunity to receive their feedback. And following that, like all regulations, it would go through the Canada Gazette process. So there would be a further public publication of the draft regulations and an opportunity for stakeholders to comment once more.
Peter?
Thank you.
Okay. Then we'll go to Ms. Sirowitz, then Mr. Fast, then Ms. Jansen, then Mr. St. Marie. Julie.
Thank you. Thanks so much, Mr. Chair. And I too want to thank all of our presenters today. Thank you for being here today. Thanks for your service to our country. In Section C of Division 7, it talks about amending the definitions of designated information to include certain information associated with virtual currency transactions. Does that include non-fungible tokens?
I'll ask my colleague Gabriel No to jump in on that. He's the virtual assets expert here at the Department of Finance.
Okay,
over to the expert.
I thank you for that, Chair, and thank you for the question. And I'll try to live up to that introduction, Justin. So Canada's regulations were actually amended in 2019 to cover virtual currencies. And virtual currencies would be covered in a function-based manner. So if they were used to be transferring value, or if they're going to be used to exchange between fiat to virtual currency, or vice versa, or even virtual currency to virtual currency. So NFTs as they stand could trigger obligations under the proceeds of crime legislation, just because of the fact of how they're going to be used. So it's not a direct answer, but the regulations are meant to be function-based, so that if ever NFTs were to be used in a financial transaction, or if they're going to be used to exchange value, then at that point, there would be some triggering activities under that.
So, Mr. Chair, if you'll allow me, just so I understand properly, so you're saying that if they are used for these transactions, then the definition would include non-fungible tokens because they're used for these types of transactions. Yes.
Thank you. So I'll just thank you for that question, and I'll just follow up by saying again, so the regulations don't use the terms non-fungible token. They don't use the term cryptocurrency. They don't use the terms Bitcoin. They're used to explain that it's a token or a type of virtual currency that's used for payment and investment purposes. So that means that if ever an NFT would be used for those purposes, it would be triggering AML, ATF, anti-money laundering, anti-terrorist financing regulation obligations. So it's meant to be future-proof and is meant to be function-based. So the answer is that it depends if NFTs were to be used in that fashion moving forward. Thank you.
Thank you.
Mr. Fast and then Ms. Jansen.
All right, Chair, I've got two questions. The first one has to do with criminal penalties. Division 7 does strengthen the criminal penalties in the Proceeds of Crime and Terrorist Financing Act to align with previous amendments to the Criminal Code. Could you just refresh our memories what those new tougher penalties might be?
Sure. So the maximum criminal penalties on summary convictions for all offenses under the Act would be increased from 6 months to 2 years less a day of imprisonment. In addition, the two-step penalty structure for offenses related to non-compliance with suspicious transaction reporting would be amended to eliminate the lesser penalty for a first-time offense. And then looking at the monetary penalties, this was done to establish consistency with the structure of monetary penalties under the Act. So for a summary offense, and to ensure the maximum available penalty is consistently half that of the monetary penalties for its indictable counterpart for the same offense. So the current fines for a summary offense range from $50,000 to $500,000. The proposed changes would increase the monetary penalty to a maximum fine of $250,000 and to $1 million for more serious offenses, such as violations of reporting requirements. And I would add that even though these penalties have increased, they would remain at the discretion of the judiciary to determine the appropriate penalty ultimately.
So there are no mandatory minimums here?
I do not believe there are any. Well, there are ranges provided, but
ranges are not mandatory minimums.
Right. There are no. The judiciary would retain its discretion to determine the appropriate penalty.
Yeah. Okay. My second question has to do with the question related to Ms. Derewitz's question. That is the definition of politically exposed domestic person. On at least 3 occasions, Clause 161 redefines or amends the definition of politically exposed domestic person. Can you tell me what was the problem that this is intended to address?
Sure. So broadly, in the world of anti-money laundering, it's recognized.
Oops, we lost.
Politically exposed persons are in positions. Oh, am I still there?
Yeah, you're coming now. We lost you for a minute.
All right, sorry about that. So I was saying, broadly in the space of anti-money laundering, it's recognized that politically exposed persons are in positions that are vulnerable to attempts to commit money laundering and related offenses, including corruption and bribery. So that's why Canada's legislation requires reporting entities to identify when their clients are politically exposed persons and to conduct enhanced due diligence on high-risk politically exposed persons. So in this case, the proposed amendments to the definition of politically exposed persons are to specifically include equivalent positions to a mayor And these would help clarify the definition and achieve the overall public policy objective of including public officials of leading organizations with control or influence over large amounts of public funds due to the nature of their position.
Thank you. That's helpful.
Okay, thank you both, Ms. Jansen, followed by Mr. St. Marie. Tamara?
Yes, thank you. I was just wondering, you're making these changes, and yet, under the persons that are being regulated, you're not adding lawyers, and it's my understanding that that's a real issue, that lawyers are using client privilege in order to kind of keep some of that stuff under wraps. Can you talk about how will this help that?
As you mentioned, this does not add any regulation of lawyers. In the view of the Department of Finance officials, the legal profession does remain a high risk for money laundering, and we are continuing to work with the legal profession, specifically the Federation of Law Societies of Canada. We have an ongoing working group with them to explore ways to enhance the anti-money laundering, anti-terrorist financing supervision of the legal profession.
And what sort of options are you looking at? Like, there's got to be something.
Yes. Well, we're exploring all the options. I don't think we've, I'm not here in a position to say which options are on or off the table, but I can give a couple of examples. I think a notable example is we've been having a lot of discussions recently with the Federation of Law Societies of Canada on their model rules. So they have model rules that deal with things such as practices that law societies should implement with respect to anti-money laundering supervision. And they're looking to update those model rules. And we've been having conversations about how those could best align with the federal anti-money laundering framework. We've also had ongoing discussions with them in terms of information sharing with federal authorities, notably the Royal Canadian Mounted Police, and how we can improve information sharing between the legal profession and federal authorities with a role in anti-money laundering.
Okay, Tamara, then Mr. St. Marie. Gabriel?
Oui, merci, Monsieur le Président. Donc, bonjour, Monsieur Brown, bonjour.
Yes, thank you. Hello, everyone. My question is to know whether, according to you and your team, does this section, will it have an effect on the price of real estate in Canada? And this is something we hear a lot, but in the Toronto Star today, there was an opinion of a Mr. Wong who was making a connection between where foreign investors could have an effect on the real estate market, but indicating that there could be a foreign capital that may be coming from money laundering or from criminal sources. So according to your team, with this division, could that have an impact on the residential real estate market in Canada? Thank you. Thank you. The changes that are being proposed are very specific and very targeted. So there has been a lot of research that has been done that does show a link between criminality and the real estate market. So in the sense that these amendments will modernize some portions of the legislation that may be of help, but I would not say that there is a link, such a direct link as that, with these particular amendments. Thank you very much, and thank you for answering in French.
Questions from members? Okay, I just have one, and that is on the cost recovery aspect. What protection is there for institutions that the cost recovery doesn't get out of control? One thing, by having it in regulation, it can be cost recovery can be increased with the stroke of a pen. Doesn't really have to appear before Parliament, just in the Gazette. And I've had a lot of experience with cost recovery in the farm sector, and it sometimes gets out of control. So what's the protection against overburdened cost recovery as an institution staffs up in its own interest?
So at first instance, as previously said, we do fully intend to consult with the implicated businesses and professions on the model. And so we'll be able to take on board their feedback on the methodology, which should give them, the regulation should provide quite a good sense of how those costs will be calculated, and will provide a great deal of transparency to those businesses and professions. So in addition to our informal consultations, there will be the formal Gazette consultation process. So again, that would be public. They'd have an opportunity to comment through the normal government regulations making processes. Once assuming these amendments get passed and assuming regulations come into force as well, following that, FINTRAC intends to have ongoing outreach with regulated entities on the issue of cost recovery. We've had discussions with OSFI, who have similar outreach on a regular basis to go over projected changes to their costs, for example, explain where those costs would be going. So we do expect a great deal of transparency and interaction with those sectors. And lastly, FINTRAC is subject to corporate reporting. So they report to Parliament via the Minister of Finance, and their intended changes to compliance costs would be laid out in their annual reporting. So that would provide further transparency to the public. And if any reporting entities had any concerns, in addition to be able to voice those with FINTRAC, they would be able to voice those with the Minister of Finance, who would be reviewing that annual reporting before it goes to Parliament.
Thank you for that. I just would say taking on feedback is sometimes people really have to hear on these costs what it means on the ground versus what it means in Ottawa. I mean, we have to do it, I know, but Ms. Jansen.
Yes, thanks. I was just wondering what, if these would pass, what are the added costs and how does that compare to cost recovery?
We don't have a specific fixed cost, but our internal analysis at this point suggests that the compliance costs would be around $30 million at FINTRAC. So that would be the amounts that would be estimated at this point that would be recovered from industry.
Okay, thank you all. I believe that completes us in Division 7. We will, no further questions. We'll turn then to Division 11, which is Federal Provincial Fiscal Arrangements Act, Fiscal Stabilization Payments. Who's on deck here?
That would be me. I'm Suzanne Kennedy.
Welcome.
Thanks. So I'm Acting Director General of Federal Provincial Relations Division at the Department of Finance. So Division 11 amends the Federal Provincial Fiscal Arrangements Act to implement the modernization of the Fiscal Stabilization Program that was announced in the Fall Economic Statement. By way of background, the program provides financial assistance to provinces that are facing significant declines in their revenues resulting from extraordinary economic downturns. The program provides financial help to any province faced with a year-over-year decline of more than 5% in its non-resource revenues or more than 50% in its resource revenues, with adjustments for interactions between the two. Payments are currently capped at $60 per person for a given fiscal year. So this enactment raises the maximum payment from $60 per capita to $166 per capita for 2018-19 and indexes the cap to grow thereafter in line with total Canadian economic growth per person. It also specifies that the cap cannot decline. The higher cap will apply to claims for 2019-20 and onward, and it works out to a cap of about $170 per person in 2019-20 and 2020-21, as was announced in the fall economic statement. In addition, it makes technical changes to the calculation of fiscal stabilization payments. These technical changes would apply to claims for 2021-22 and onward. Briefly, the enactment amends the Act to measure a province's personal and corporate income tax revenues based on assessments completed over the following calendar year, rather than the tax year to which the assessments apply. It also sets an earlier deadline for provinces to apply for payments. Together, these changes would enable claims to be finalized roughly 1 year earlier, as was announced in the fall economic statement. The enactment also amends the program to include revenues from transferred tax points in revenues eligible for stabilization and eliminates an inconsistency in the program's treatment of declines between 0 and 5% in resource and non-resource revenues. I'll stop there.
Thank you very much, Ms. Kennedy. I have on my list, we'll start with Mr. Kelly, then Mr. Fast, then Mr. Julian. Pat.
Thank you. So this will implement what was announced in the fall economic statement of the increase from 60 to 170. But is it correct then that at $170 per capita, this means less than $1 billion in fiscal sustainability money back to Alberta, a province that has continued to pay out many billions of dollars, as we heard at the Finance Committee, about 4,000 per person. Are these numbers roughly correct?
I can say that the maximum for Alberta would be raised to about $750 million for 2020-21. And then the maximum amount is indexed to growth in GDP per capita from there on.
Given that this is a measure to help mitigate volatility in provincial drops in revenue, which would necessitate a province to continue to pay into the equalization system based on long-term averages, despite sudden catastrophic drops in revenue. Why have a cap at all? I mean, I guess that is a political question, so one better for the minister, but there was a recommendation in our dissenting report to just do away with the cap at all altogether, and that a cap doesn't really harms the ability to actually address the purpose of the fund. So is there, can you give us some explanation on the thinking behind continuing to have a cap?
I can't speak to the decision by the government, but I can say that considerations around the cap would include the exposure of the federal government. If there's no cap, then there's no cap on the exposure of to any drop in revenues.
And yet there's no cap the other way, though. So this is where you capture the fairness of the overall system. But these are political questions. I'll leave that for now. But I do want to make sure that we're clear about this. That the raising the limit to $170 is it's 750 odd million for Alberta. It's really not much.
Perhaps I should add that provinces do not pay into the fiscal stabilization program, nor into equalization for that matter.
No further questions, please.
Sorry, but that I was on mute. Mr. Fast.
Actually, Pat just asked questions that interested me. The only question I'll ask is there was some money that was paid to Alberta and Saskatchewan, and I believe Newfoundland and Labrador. I think Alberta received about $1 billion. I'm assuming that this additional fiscal stabilization payment to Alberta would be incremental to that $1 billion, correct?
Yeah, the higher cap would apply to claims for 2019-20 and onward. And thus far, there have been no claims made.
And there are no retroactive claims available to be made, correct?
That is correct.
And why is that?
The cap is being applied right now. The government has taken other actions to assist oil producing provinces.
Okay.
You okay with that, Ed? Then turning
I think so for now. Yeah.
Okay. Gabriel St. Marie.
Oui, donc merci.
Yes, thank you for your presentation. I have two questions. First of all, you said that the government is taking other actions to be able to support the provinces. Can you tell us which actions you're referring to? Yes. The government has announced a financing to help the provinces oil producing, $1 billion for Alberta, $400 million for Saskatchewan, and $320 million for Newfoundland and Labrador, and a $200 million loan to an Alberta association to be able to do cleanup activities in the oil sands. And also there have been support through the reduction emission fund. There's been support to oil and gas companies. Yes, thank you. My next question. Do you have a formula for payments that were used to be able to calculate the stabilization payments? And if you could send those to us, please. Yes, you have that within the legislation. And so, yes, we will be able to send that to the committee. Thank you very much.
Ms. Kennedy, you can just send that to the clerk of the committee and he'll distribute it. Ms. Jansen.
Yes, I just was wondering, Ms. Kennedy mentioned that provinces don't put money into the fiscal stabilization program. So I'm just wondering, where does that money come from?
It's just general revenues of the government, of the federal government.
Right. So it would be from taxes.
That's correct.
Okay. I just wanted to make sure, because I was like, where does it come from if it doesn't come from taxes?
Okay. Then I think we're clear on that one. Is there any further questions to Ms. Kennedy on Division 11? Ms. Zerowitz.
Just a quick question, Mr. Chair. Thank you, Ms. Kennedy, for your excellent presentation and for your patience in answering all our questions. Just a quick question for you. The increase is, I know that you mentioned sort of, 2020, 2021, 2021, 2022. Is it just ongoing, or is it just for those specific years? I just want to make sure that it is sort of the increase to 170 is ongoing moving forward.
Yes, it's ongoing. It will be indexed to growth in GDP per capita in the future, with a provision that it cannot decline.
Thank you.
Okay, then that will complete questions on Division 11. We'll turn to Division 12, which is on the Federal Provincial Fiscal Arrangements Act, additional health payments. Who's up on this one?
That would be me again.
Oh, you again. Welcome back, Suzanne.
So Division 12 proposes to amend the Federal Provincial Fiscal Arrangements Act to authorize a $4 billion payment to the provinces and territories through the Canada Health Transfer, allocated on an equal per capita basis. It is a one-time payment intended to support clearing healthcare system backlogs caused by the pandemic.
So I have Mr. Julian up first. The payments to each province are listed in your binders. Mr. Julian, followed by Ms. Jensen.
Thank you very much, Mr. Chair. So it's a one-time payment, but we know that there is chronic underfunding in healthcare, and we've seen that since years ago when the funding formula basically did not meet the full healthcare needs of what we're seeing right across the country. So my question is, how do we ensure that that $4 billion one-time payment becomes an annual payment?
The Prime Minister has committed to discussions with the provinces on that, and First Ministers have instructed officials at the federal and provincial territorial level to have discussions about that, about what is required for healthcare funding and where we are with that. So this is a one-time payment due to the pandemic while those discussions are ongoing.
Well, thank you for that. So I'll ask the same question I've asked previously, which is, what is the timeline for that? At what point does the ministry see additional funding being regularized on an annualized basis? Is there a deadline, as we've seen with some of the other proposals, the deadline being the fall economic statement? Is there clear criteria about what the process will be over the next few months?
There has been no announcement to that effect, and so it's not a question that I can answer.
Okay, thank you.
Good. Then we'll go to Ms. Jensen.
Yes, I'm just wondering, what sort of, how will the government ensure that there's accountability measures in place? Like, what sort of strings are attached to ensure that actually that money is used and is actually clearing backlogs?
It is similar to the Canada Health Transfer in that it's largely unconditional, but provinces and territories need to respect the principles of the Canada Health Act. So it would be subject to the same.
So there's no real measurement that's being said, like you have to reduce your backlog by 50% in order to qualify for the funds. No strings attached, basically.
Correct. There are no reporting requirements of that sort.
Ms. Ted Falk.
Thank you, Mr. Chair. Thank you, Suzanne, for your commentary. And I'm wondering, similar to Ms. Jansen's question, is the federal government keeping track of the monies that have been forwarded to the provinces for COVID-19 subsidies? Are we keeping track of the amount of money that provinces are actually spending on projects or for areas where we've designated funding for? Do we keep a log of that? Are we tracking it? What's happening?
There are, to the extent that there are requirements, they are being tracked. There are some elements that do not have conditions to track. So I'm afraid I don't have the details on that.
Okay, like my understanding is province, just as one example, and I know that there's been billions and billions of dollars, hundreds of billions of dollars sent to the provinces in the last 14 months because of COVID-19. And my understanding is like one bucket of money that was given to the provinces was to support aviation industry for scheduled aviation services to northern and indigenous communities. And I know that not all the provinces spent the allocated amount that was given to them by the federal government, but there's been hundreds of program funding announcements made to the provinces. And what percentage of that money is the province actually spending for what they're supposed to be, and what are they not?
I'm sorry, I can only speak to the measures that are in Bill C-30 today.
That's thank
Well,
you for
this
that.
is kind of related to that because I mean, we're being asked to approve measures, and we don't even know if the provinces are spending the money that they're committed to spending for other programs that they've been receiving. And you know, Ms. Jansen's question articulated as well that the money that they're going to receive for these health transfers, there's no accountability for this money that's being given to all the provinces.
I think that's more a question, Ted, for the minister. Might be a good Wednesday question for the Prime Minister. Where's the accountability?
Thanks, Mr.
I
Chair.
don't think it's. I don't think Ms. Kennedy can answer. Okay. Any further questions? That sums it up on Division 12. Then turning to Division 13, which is Canada's COVID-19 immunization plan, on monies spent there in each of the provinces. Same question applies here like they did. Who's on this one? You again, Ms. Kendi?
It's actually Omar Rajabelli.
Ah, Omar. Okay. Go ahead. Introduce yourself first there, Omar.
Absolutely. My name is Omar Rajabelli. I'm the Acting Director General of Social Policy within the Department of Finance. I'm here to provide an overview of the part titled Canada's COVID Immunization Plan, specifically Division 13, Section 198. This measure establishes an appropriations authority payment of up to $1 billion out of the Consolidated Revenue Fund by the Minister of Finance to provinces and territories in support of Canada's COVID immunization plan. Payments are to be allocated to provinces and territories on a per capita basis and can be used for a variety of vaccine-related costs. The payment will be made in 21-22. The statutory payment authority will ensure that funding is available to support provinces and territories in this last step to vaccinate Canadians. I'll pause there.
Okay, who's got questions on this round? We'll start with Mr. Falk. And then
yeah, thanks, Mr. Chair. And then again, a similar question. Can we get finance officials to provide this committee with a list of all the project funding from the last 14 months related to COVID that has been forwarded to the provinces, the amount of money that's spent, and the amount of money that the provinces have not spent for designated program funding? Can we ask them to do that? I mean, that's not a political question. That's just provide us with information.
So I can only answer questions on Section 198, and I can't actually provide sort of a commitment on part of other areas. So I'm happy to answer questions on Section 198.
Yeah, I think on that one, Ted, it may be a question that we want to ask at either the minister or others. It is certainly a legitimate question. Where has the money been spent? But we're here. These officials are here on certain sections on the BIA and wouldn't have the ability to respond fully to that. But I do think that's a question we need to raise. Mr. Fast, followed by Ms. Sirowitz, and then Ms. Jensen.
Well, Mr. Chair, I would be glad to have you raise that issue in question period with your Prime Minister. I have a question related to Ms. Jansen's and Mr. Falk's. There's a total of $1 billion being spent here to assist in ramping up immunizations across Canada. But this $1 billion is not part of the Canada Health Transfer, correct?
Correct.
All right, so the provinces don't have the same opportunity to complain that they shouldn't be instructed on how to spend this because it's not part of the health transfer, it's not part of a social transfer. This is a separate transfer from the federal government, and one would expect that there would be significant accountability for how this money is spent and reporting back to Parliament on how $1 billion of taxpayers' money is being spent across the country. Would you agree with me?
I can't comment on what my personal opinion is, but what I can say with respect to this specific appropriations authority, there is the expectation of the report to the citizens, but there is no reporting back to the government of Canada.
And why is that? Is that something that the government deliberately did, or is it something the provinces requested that there not be a reporting requirement?
This is the government's decision. I can't say why they took that specific decision.
So this was not driven by the civil servants. This was a decision taken by the government itself.
It's all decisions that are taken in the BI are the decisions by the government.
By the government. Okay, so then that's something we will have to take up with the Prime Minister. Accountability for $1 billion. I would imagine that's something that all of us would support.
That's it, Ed. Then turning to Ms. Zerowitz and then Ms. Jensen.
Thank you so much, Mr. Chair, and thank you for your presentation on this on Division 13. Can you give us examples of what would be included under Canada's COVID-19 immunization plan? Like what would be expected? Is it to buy the vials? Is it for the contact tracing? Can you give us an idea of what might be included as part of this $1 billion spending?
Absolutely. So the intention is not for the procurement side of the vial side, because I think that's being done by the government separately. This component is for the province territories rollout of the vaccines campaign. So things that could be included, of course, it's dependent on the unique circumstances of each PT, could include things such as max vaccination clinics in large venues, training for workers at vaccine clinics, health human resources, and reporting on vaccination rates as examples.
And just a follow-up question on that. I'm assuming that it's distributed sort of in a per capita fashion to the provinces and territories as well, yes?
Correct. It's a per capita allocation, and the specific amounts are actually in the bill.
Thank you so much.
No problem.
Thank you, Ms. Zerowitz. Ms. Jensen, followed by Mr. St. Marie.
Yes, I'm just wondering, how did you come up with a per capita number? That's my first question. Like what did you put in the estimate of how much you would need per person?
It's the decision by the government to provide the $1 billion divided on a per person basis, which gets to that per capita number that's in the legislation.
Oh, so nobody was looking at what possibly the costs were and working it backwards. They were saying, okay, here's $1 billion. So just divvy it up between everybody and then they can spend it. But that's just that's the oddest way of doing things. So the government told you you've got $1 billion, split it up per capita and let the provinces figure it out. Okay, sorry.
I might mention, Amar, as well, there was a floor for the smaller provinces and territories and then per capita, correct?
There is no floor for the smaller province territories in the $1 billion that's being provided to them.
There is no, or there is?
There is none.
There is none.
It is a straight per capita distribution for each of the province territories.
Okay, where's the per capita? Where's the floor one come in? I know there's a program with a floor as well. That was on the ventilation for schools. Okay.
Sorry, I can't speak to the other sections. Sorry.
Okay. No, I do know which one it was. Come to my mind now. Mr. St. Marie.
Thank you. And thank you for your presentation. I agree with Madame Jensen's comment. I think it would be advantageous for the government not simply to distribute money for vaccination or for health per capita, but to take into consideration the aging population and the costs of the healthcare system so that we can support the elderly. I think that this would be a more appropriate calculation method to be able to distribute financing for healthcare. My question is, does your team, have you evaluated the cost of vaccination, and are you able to tell us this $1 billion and the former amounts, what percentage of the whole vaccination operation do they represent? Thank you.
I can't provide the percentage that's actually provided. All I can talk about is the section here in terms of the payment to the PTs.
Well, if the government said we have $1 billion, once again, this comes back to what my colleagues have said. What did they saying? Well, that sounds good, $1 billion. Let's go ahead with that. But does it really, noting what that will represent, 20% of the costs, or what? You don't have that information. This is what you're saying, that the department doesn't have that information. So this was a political choice, the $1 billion.
So I do not have that information, no.
Okay, merci. Et sinon,
Thank you very much. And with respect to vaccination costs, as you said, that $1 billion doesn't cover the doses for the vaccine. Can you tell us what would be the cost per dose for each type of vaccine?
So I cannot speak to the cost per dose. I cannot speak to the procurement side. That would be something that's actually led by Public Health Agency Canada and Public Service Procurement Canada, not us.
OK, ben j'aurais essayé. Merci.
Okay, well, I will have tried.
Yeah, that was a good attempt, Gabriel. Any further questions to Omar? Okay, then thank you very much, Omar. Turning then to Division 15, which is the Hibernia Dividend-Backed Annuity Agreement, Division 15. Who's up on deck on this one?
That would be me, Mr. Chair.
Okay, Mr. Miller, you're on. Just introduce yourself and what your position is, Samuel.
Terrific. Thank you very much. Hello, my name is Sam Miller. I'm the Director General in Department of Finance who covers environment, natural resource, and corporate finance matters. So I'm here to speak today about Division 15 of the bill, Part 4, Division 15, I should say. And this division covers proposed measures that would allow the government to fully implement the agreement with the province of Newfoundland and Labrador related to the Hibernia Dividend-Backed Annuity Agreement. This was agreement that the two governments signed in April of 2019. The proposed measures in the bill would provide clear statutory authority for the Minister of Finance to make the required payments to the province of Newfoundland and Labrador from the Consolidated Revenue Fund. So just as background, the 2019 agreement provides that Canada will make annual defined payments to the province of Newfoundland and Labrador over a period of 38 years, ending in 2056. And the purpose of the agreement is to maintain and enhance the province's right under the 1985 Atlantic Accord to be the principal beneficiary of the oil and gas resources in the offshore area near the province. Thank you.
All right. Anyone got questions on this one? Mr. Falk, and it's outlined the amount of money in your documents, a little over $3 billion. Mr. Falk.
Yeah, thanks, Mr. Chair. Yeah, that is a lot of money, but it's over 38 years, and so I appreciate that. My question would be, has the calculation been done on that amount of money, whether that is actually fair compensation for the royalty of the oil and gas, or for receiving adequate fair compensation for those?
Well, the amount of the payments was tied to the expected dividends that Canada would receive from its part ownership in the Hibernia project. So it's tied to that equity share in the Hibernia project, rather than to an amount that would be collected in terms of royalties from the production of oil and gas.
And would that be consistent with industry elsewhere?
Mr. Miller?
I'm not entirely sure. I can answer the question as posed. It's the amount is tied to the specific equity share in this project, and to the dividends that were expected from that project over that period of time.
And we have good reason to believe that those dividends will be there.
We do.
Okay, thanks, Samuel.
Ms. Jansen.
I'm just wondering, this is over 38 years, $3 billion over 38 years, and especially with the kind of inflation that we're seeing happening now, do we think that's going to setting today's dollars for 38 years from now is actually going to be adequate? Is there some sort of equation put into there considering that sort of thing?
Yes, well, the agreement, which is a public document, it does have provisions to have a true up.
Does that answer your question, Tamara? It does have provisions to have a true up. All right. Any further questions to Mr. Miller on this Division 16? Hearing none, then we'll go to the last division with this panel, Division 20, which is the Canada-United States-Mexico Agreement Implementation Act. Ms. Canton on this one, I believe, is it? Or she just come on? Okay.
Oui, bonjour. Marie-Hélène Canton.
Yes, thank you, Marie-Hélène Canton from the Minister of Finance. The amendments to Division 20 are administrative to keep the approach for Canada for the lists for committees and panelists for rosters under the Canada-U.S. States-Mexico Agreement following the NAFTA. Chapter 19 of NAFTA has anti-dumping and provisions, and that decides how and Chapter 10 keeps this provision and allows Canada to do that. In Chapter 19, the responsibility to select people for these lists for the special groups and for the committee is both the Minister of Finance and the shared with the Minister responsible for trade. And so the Minister of Finance deals with the importation, and the Minister responsible for trade has to defend the Canadian interests with respect to dumping or funding. C30 proposes modification to the Canada-U.S. Mexico Agreement so that the Minister of International Trade will be able to name people for special groups and committees under Chapter 10 of the agreement, and the Minister is here with me to be able, I have with me a colleague who can answer questions.
We will go to Mr. Fast first.
Marie-Hélène, did you say you had the minister there with you?
No, she said a colleague.
I had colleagues from Global Affairs Canada with me.
Then I misheard. I do have a question, because I'd love to have the minister here and ask that question. But as you know, the United States has been very reluctant to appoint panelists to the rosters of the World Trade Organization, which has effectively emasculated that organization. Have we run into the same challenge with NAFTA and now CUSMA?
Recently, there have been delays in terms of setting up special groups for the timber disputes. So it does take a certain amount of time to set these panels up. We have to be able to look at the availability for members on the list, and also with respect to conflict of interest. And so there have been candidates that are presented, quite a number, so that means that there are some delays. But because it's parties in the dispute will continue to table their documents within the time frame prescribed. So it's a matter of organizing the hearings. So I think things do move quite quickly. The proposals within C30 will not directly affect the presentation of Canadian candidates, and the reports over the few years have noted that the situation is regrettable, but we do hope that things will, special groups will be able to move much better.
Want in on this question, Mr. Miller? I see a hand up from Mr. Miller.
I'm sorry for the interruption, Mr. Chair. I was disconnected from the system. I'm signing back in case there were further questions on Division 15.
Okay. All right. I don't think there is, but if there is, you're here. Is that it, Ed? Okay, turning to Mr. St. Marie.
Oui, merci, Monsieur le Président.
Yes, thank you, Mr. Chair. Thank you very much, Madame Contant, for your presentation. It's very clear. What I wanted to note before the committee, though it was a bit of an issue in the 600-page document that was given us with respect to C30, the question and answer part on this question in the French version, it is presented in English. So for those that can make that modification, the question and answer portion is only in English. Well, I can assure you that the French version does exist. Okay, thank you very much.
Okay, a valid point, Gabriel. Is there any other questions on Division 20? Hearing none, is there any other questions that come to mind on any of these divisions that the witnesses are here for? 6, 7, 11, 12, 13, 15, 16, and 20. Ms. Kennedy, did you want in?
I just wanted to say that I also lost my connection, and
Okay.
so I did not speak to Division 16. I am available if you wanted me.
Okay. I don't think there was any questions on it. Anybody got any questions on Division 16, which is the Nova Scotia and Newfoundland and Labrador Additional Fiscal Equalization Offset Payments Act?
Oui, j'aurais une
Gabriel
question.
has Mr. St. Marie.
Oui, merci. Si c'est possible de nous.
Yes, thank you. If it would be possible to give us the formula that are used to do the calculations, that would be very appreciated. And earlier I didn't thank you for answering in French, so I'd like to do that now. Well, of course, we can give you the formula to the committee.
And Mr. Fraser.
Sure. Thank you, Chair and Ms. Kennedy. I think the formula may not necessarily apply for the piece with Nova Scotia. Can you confirm that that's really just adjusting the payout to the province of Nova Scotia in accordance with the arbitration that took place around the Sable Assets transportation costs, and only put the royalty where it would have been had the arbitration or the results of the arbitration really come through in the initial commercial transaction?
That is true that it is largely to, it is to compensate for the timing of the arbitration payment. The way that that is achieved is by extending the formula till 2022-23. And in the bill, the amount for the first year is just hard-coded, but it's still resulting from the application of that formula.
Is that it, Mr. Fraser? Ms. Jansen, did
Yes.
did you give the explanation on number 16 previously, Ms. Kennedy? Maybe I skipped over it.
No, I didn't. I'm afraid I lost my connection before
Okay.
that.
Do you want to give us the explanation now on 16 so we have that in the record as well? And then I'll go to Ms. Jensen's question.
Sure. So I'll start with some background. The 2005 Canada-Nova Scotia Arrangement on Offshore Revenues provided time-limited protection to Nova Scotia to offset the negative impact of offshore revenues on its equalization payments. This arrangement expired on March 31st, 2020. In 2018, Nova Scotia received a one-time settlement after an arbitration process concerning how transportation costs were treated in the Sable Offshore Energy Project royalty calculations. The settlement recognized that transportation costs claimed had been too high, and thus past royalties paid were too low. As the equalization program operates with a 2-year data lag and 3-year moving average, the one-time settlement payment will reduce the province's equalization payments from 2020-21 to 2022-23. Had these royalties been paid out initially rather than retroactively, Their impact on Nova Scotia's equalization payments would have largely been offset under the 2005 arrangement on offshore revenues. So Division 16 amends the Nova Scotia and Newfoundland and Labrador Additional Fiscal Equalization Offset Payments Act to extend the Minister of Finance's authority to make additional fiscal equalization offset payments to Nova Scotia until 2022-23. This would ensure that Nova Scotia is not penalized by the timing of a recalculation of past royalties, as discussed earlier.
Thank you, Ms. Kenny. And now I have 3 questions on the list. Ms. Jensen, Mr. Falk, and Mr. Fast. Ms. Jensen.
Yeah, I'm just wondering if you, sorry, if you could give me a little bit of a Cole's notes and kind of like a Hibernia for dummies, because I don't think I quite understand. Did the contract go bad? Is that what you're saying? And that's why this is being done?
No, they had an arbitration process that essentially said they should have been paid more royalties earlier, and they received a lump sum payment in 2018. And so they did not receive the full protection for those royalty amounts under the 2005 offshore revenue arrangement that they otherwise would have.
Okay, thank you.
Thank you, Mr. Falk.
Thank you, Mr. Chair. And it's more of a general question. You had asked for general questions before, and that's why when I put my hand up. You know, we've got a lot of director generals on this in this meeting, on this call, and or acting director generals. And there seems to be a lot of the spending, a lack of reporting and accountability from the provinces with the distribution of the funds that they're receiving from the federal government. And my question is, and if each one of them could answer specifically, is this due to a decision made by themselves, or is this the direction that they've received from the minister to not require the reporting and accountability? I think it's a fair question, Mr. Chair.
Maybe though should be go. I'll open it up if somebody wants to take a stab at it, but I think it is more a question for a minister. But if somebody wants to answer from the department, that's fine. Is anybody taking up the challenge? I don't see anybody.
Nobody wants to throw the minister under the bus.
You'll have to. You'll have a good question for question period, Mr. Fast.
Thank you. I want to go back to specifically the offset payment program for Nova Scotia. And I don't know if our officials can answer this. Maybe Mr. Fraser can answer this. The offshore oil and gas revenues for Nova Scotia, have they come to an end? Has Nova Scotia exhausted those, or what's the status? Do we still expect there to be revenue streams coming in the future? Because I understood we're coming to the end of that program.
Miss Kennedy or Mr. Fraser? Mr. Fraser will be back. He's getting a new headset. You don't need. This is finance
a serious
committee.
answer now.
This is finance committee, not the house, Sean. You don't need a jacket on here. Look,
out of respect for my my good friend Mr. Fast, yeah, look, the revenues from the project that was the subject of the arbitration are coming to an end. There was a dispute not about the project falling apart, but about the amount of royalties that ought to have been paid under it. My understanding of the legislative change is to essentially put Nova Scotia in the same place that it would have been had the company been paying the royalties in accordance to what the arbitrator found they should have been rather than what they in fact were paying.
Yeah, and that was my understanding as well, Mr. Chair.
All right.
I put on my jacket for this.
Yep.
Okay, folks. Back to the whole panel on all those divisions. Is there anything more anybody wants to add? All right. Look to all the officials that are here. Thank you for your presentations, and thanks again for what you do in these very difficult times. So We appreciate the briefing on each of the divisions and your answering our questions. With that, we will adjourn this meeting, and we will see everyone at the next meeting, which is 2:30 Ottawa time, I believe. 3:30 here. Meeting adjourned. Thank you all.